You know, it's difficult to find transparency here in the real world. We've got politicians on both sides of the aisle that will continuously mislead us and outright lie to us. People like to recommend what you should do in a certain situation, but if you look at what they've done or what they're doing themselves, what they're really saying is do as I say, not as I do. There's a lot of personal finance content here on YouTube, and it's difficult to find transparency. We're going to jump into Fidelity and look at every single holding that I own, what my cost basis is, which dividend stocks do I have current call options on, how many shares I own in each dividend stock, man, everything in between. Psst, spoiler alert, everything I talk about, I do myself. Alright guys, we are inside of and you are looking directly at my Fidelity Investments account. Let's take a look first here at the high yield dividend account. Let's take a look at some of these holdings. These are all, for the most part, except for a few, these are all dividend stocks that are on my dividend stock spreadsheet. This is that dividend stock spreadsheet. I put it out every month to my Patreon community. It lists all of the dividend stocks that have been raising their dividend consecutively for at least 5 years. If you want to check this out and all of the extras that come with being a part of the Patreon community, check out the link in the description below. First off, I've got a mortgage real estate investment trust, Arbor Realty, right here. Currently priced at $17.32 a share. I own 239 shares of this REIT, and it makes up 7.2% of the high yield dividend portfolio. You'll notice I've got an overall loss, actually. My cost basis is $18.94, current price is $17.32. It's not that big of a deal to me that I've got a little bit of a loss here, and I don't sell covered calls on this holding. I just continue to receive dividends and reinvest them back into ABR. Next up, I've got Deliclogistics right here. I talked about them recently because it's a relatively new holding. I've only got 41 shares here. Total value of this holding is $1,886.72. Move on from there. I've also got Enbridge right here, and you'll notice that I've got a call next to it. So Enbridge is one I talked about maybe a month or two ago. This dividend stock is currently priced at $46.63, and my cost basis is $41.94, which allows me to then sell covered calls. So I've got 101.3 shares, and as a result, I've got one call option here. So right now it's in the money. It's going to expire on April 14th. So if the price of Enbridge is above $45 on April 14th, which is when this option expires, then those shares will be called away from me. I will receive $45 times 100, so $4,500, and I will use that money to buy into a new dividend stock, potentially even Enbridge. You'll notice right here that I received $100 for this call option when I sold it. Currently worth $180, which means if I had to buy it back, it would be a loss for me. Next up, Manulife Financial. This is a holding that's been there for a long time in the portfolio. I own 338 shares. Total portfolio makes up $7,247. I would sell call options on Manulife, but the premiums that I can receive are very, very low, so it's not worth it for me. I just hold it, I receive dividends, and I reinvest those dividends. All right, next up, Altria Group. This is one I've talked about before. I've got 100.344 shares. It makes up $5,290 of the portfolio, or 9.18%. And my cost base is $48.53. Current price is $52.72. I have a call option on Altria Group, which means that by May 6th, if the price of Altria is above $55 a share, then I will get those shares called away from me and I will receive $5,500 as a result. Currently priced at $52.72, so I'm comfortable with that. Next, I've got Northwest Bank shares, which is in the financial sector. It's a bank. It's a holding company of a bank, and I've got 460 shares. It makes up 10.74% of the portfolio, and its total value is $61.91 here. Again, this is another example of a dividend stock. High yield, does not have good option premium, so I do not sell covered calls on this holding. Then you guys know that I talked a lot on this channel about QYLD and a little bit about RYLD as well. I do have them in my portfolio. They make up each about 8% and about 8% each in the portfolio, with a total holding value of around $4,700 for each. And I'm up with my overall value here. My cost basis for QYLD is $20, and it's currently priced at $21.08. Cost basis for RYLD is $22.78. Priced at $24.05 currently. Next up here, I've got Star Group units here. This is a limited partnership, but it actually, you don't get a K1, you get a 1099 with Star Group, and it makes up $5,488 in the portfolio, which is 9.5%. I own 491 shares of this dividend stock. Another one where I don't sell covered calls because the premiums just aren't worth it. Then we've got Store Capital, which is a real estate investment trust. That makes up $5,173 in the portfolio. 8.97% of the portfolio, and overall I got a slight loss there. My cost basis is $30.60 versus $29.60. And then lastly here, Westlake Chemical. I am up on this one, I believe. Yes, cost basis is $26.36. and current price is $27.50. 302 shares owned, which makes up 14% of the portfolio. Switch this over to dividend view so you can see the yields here. Let me sort by yield. Top yields here are RYLD and QYLD at 13.78 versus and 13.23. Then I've got 8.79, 8.55, 6.91, 6.83. Lowest yield here is Manulife Financial at 4.91%. Currently, without adding any additional money, this portfolio puts off about $4,250 in annual income. And this overall makes up about 40% of the portfolio, my total overall dividend portfolio. I did mention briefly the core dividend account here. There's not much going on. I just haven't had an opportunity yet because the shares are still kind of new. I bought into additional shares of Schwab US Dividend Equity ETF, SCHD. So this is going to move over into the options account, which I'm going to rename the core dividend account over there. And current value of these shares here, $2309.50, which is 29 shares. And then this money has already been moved over to the options account. All right, here's the main options account, which again, I'm going to rename it to the core dividend account probably. First off, AbbVie, a big fan of them. I would actually buy more shares right now, and I still might do it just to get to 100 so I can sell covered calls, but I'm leaning against doing that, partly because the yield right now on AbbVie is below 4%, it's around 3.5% due to the price increases. I've got 68 shares currently. It makes up just over 11.5% of the portfolio. But you'll notice I've got a really, really low cost basis, $104 average per share versus $161. So I've got a gain of 54% on this holding. So that's going to be a massive tax hit if I do get assigned on a covered call. So I may end up doing that, may not. Next up, I've got Aflac here, and I've got a covered call on Aflac. I own 100 shares, and I've got one covered call option here. This makes up 6.69% of the portfolio. Current value, $63.61 a share. I like Aflac. It's a dividend champion. It's got good dividend growth rates, and it's got a safe payout ratio based on free cash flow. Eris Capital right here is actually supposed to be in the high dividend yield account. I've just had some back-end issues trying to move it over because this account has margin and the other one doesn't. So this one here is actually part of the high yield dividend account. It makes up, I've got 366 shares of Eris Capital, which is a business development company. It makes up 8% of this portfolio, and I've got a gain on this one, lifetime of 14%. Here's another one of my favorite core dividend holdings, Avgo, which is Broadcom Incorporated. Massive gain here, 55% on this one. It's got a really strong dividend growth rate. As you can see right here, it consistently raises its dividend by a lot, and it's got a really low dividend payout ratio at 55% based on free cash flow. Yield's a little bit lower currently at around 2.6, 2.7%, but again, strong dividend growth rates as you can see right here, raising dividends for at least 13 years. Colgate Palmolive here is one that I've got quite a bit of a loss, a paper loss on right now, so I'm not able to sell covered calls. I had sold one or two. My cost basis is $83.78, but the current value is $76.59. So I really am making it a point not to sell a covered call because I wouldn't want to sell a covered call and lock in a loss below my cost basis. But I've got 100 shares there. Current value is $76.59. Then I've got First of Long Island Corporation. This is another core dividend holding for me. One that's a dividend champion, raising dividends for at least 25 consecutive years. Here's First of Long Island on the spreadsheet, 25 years. Consistently raising their dividend, 5.5%, 17.9% on the 3-year growth rate, 7.1% on the 5-year growth rate. Payout ratio is only 42% based on free cash flow, and a yield over 3%, near 4%. Then we've got Gilead Sciences here, another one where I've got, it's below my cost basis, so I'm not selling any covered calls here. So Gilead Sciences, it's got a great yield here. We'll look at that in a second. Makes up 7.66% of the portfolio, 120 shares, and it makes up $7,287 here. Cost basis, like I said, 68 versus current value 60. This is another one off the dividend stock spreadsheet. Let me show you that. Gilead has been raising dividends down for 7 consecutive years. It's consistently raising that dividend by a healthy amount here, and it's got a really low payout ratio, 49%. Yielding currently right around 4.5, I think, 4.72%. Then I've got Intel Corporation here with a covered call option. The cost basis here is $49.50, and my option here, my covered call is at $50. The $50 strike price. Like I said, 100 shares here, currently worth $49.20, makes up 5% of the portfolio. So when I sold this call option for Intel, I earned $84 for that call option, and it's currently worth $25. But I might just hold it to expiration. Here's one that's actually going to be going bye-bye in my portfolio. MSC Industrial right here is currently worth $84.28, and my cost basis is $81.47. 50 shares worth $4,222. I've got an overall gain here. Now, the problem with MSC Industrial is it actually stopped raising its dividend. It held it steady at the same value. And if a dividend stock doesn't have a really high dividend yield and it stops raising its dividend, then for me personally, the reason why I own the dividend stock is no longer there. So even though it's maintaining its dividend, it's not growing it, and inflation is going to eat into that dividend every single year. So I am going to be selling MSM here pretty soon and replacing it with a dividend stock with a strong and consistent track record of raising the dividend. Next, I've got a put option right now with Starbucks. The strike price there is $92 per share. This actually had a big hit today because the new CEO, Howard Schultz, the returning CEO of Howard Schultz, announced they were stopping their share buyback program. So this value went up big time here on this put option. I sold it for $184. And if I wanted to buy it back, it would cost me $4.40. The Starbucks is trading currently for $88 per share, but I've still got about 10 days here before that put option actually expires or gets assigned. Then I've got SCHG here, the Schwab US Dividend Equity ETF, which is, I own 44 shares, which doesn't count the other 29 I showed you in the other account that are on their way over to this account. SCHG is that dividend ETF I really love as a core dividend holding. It's got a really strong dividend growth rate, a really healthy dividend yield, and it adds a lot of diversification to the portfolio. Once I do get to 100 shares, I am going to start selling covered calls on it as well. All right, I've got a put option on Walgreen Boots Alliance right now that is going to expire or get assigned on April 14th. Right now, it looks like it's in the money right now, which means I could get assigned on Walgreen Boots in 10 days. I sold it for $132, and it's currently worth $325. Not a problem, because if I do get assigned on Walgreen Boots Alliance, I love this dividend stock, so it's not that big of a deal to me. And then my last holding in this account is Exxon Mobil, and this is one that's currently worth $83.16 a share. It makes up, I've got 100 shares, it makes up about 8.75% of the portfolio, and I've got a covered call on it that expires May 6th, and for that, I sold it for $2.24 or $224 for the option, and it's worth right about what I sold it for. Overall, this portfolio is worth $95,087.59. So overall portfolio right now, when you factor in the options account, the remainder and the core dividend account, and the high yield dividend account, it makes up a total of $155,049.48. That's what I own, guys. That's my entire portfolio. I'm very transparent with my holdings, but you don't get as many updates on when I change the portfolio here on the channel. If you want to learn more about that, catch all of my changes that I make the day that I make them, you have to join the Patreon community. So if that's an interest to you, if you find some value there, make sure to do that. Check out the link in the description below, but you can always just get the free content from here on the channel as well. The next video, guys, we're going to talk about my favorite right now, my favorite 5 dividend stocks that I love selling covered calls on. So make sure to come back on Friday for that video. Make sure to leave your 2 cents down in the comments below. I respond to all comments on the day I post a video. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.